but on the way down, it's real estate and metal, which is clearly taking a bit of a knock. SP Tulsian and Mayuresh Joshi is also with us. Mr. Tulsian, good afternoon. I remember we were having this chat last week, and you had said that I think till September 15, when you have those advanced tax numbers, you said that you would be cautious on the market. But is it time to now go back to the buying zone, or would you remain cautious?
Anuj, if you recall, yes, you are right. In fact, I've said that the market is going to remain cautious and weak. In fact, I gave a weak call that I will remain away from the market between 6th to 12th. That is from today, because 5th we had Ganesh Chaturthi holiday, 13th we had Bakrid. So I specifically said that between these two holidays, I will definitely remain cautious and I won't be taking a positive call. And in fact, on that day, just on a lighter note, today morning, Mr. Mehrabun Irani called me, because on that day he was also there in the show, and he congratulated me that you were apt on the dot on the timeline. But yes, coming now, if you really see the corrections having taken place, largely the 2 or 3 sectors, if you just take a call, maybe from the index point of view, banking and finance, because they were all seen very heated one, but no one is talking of the tire stocks, the kind of correction which we have seen in the tire stocks today. That is also because of the long liquidations, because people have been in the tire stocks till neck. Maybe whether you talk of Sept tire, MRF, or maybe Apollo tire, JK tire. So in my view, if you really see the weakness, I think still you have 45 minutes. Maybe those who have been holding the long positions, majority of the long positions got squared off or liquidated in the morning, first thing in the morning, because of the margin pressure, and remaining positions, long positions, or maybe the weak hands will exit by close of the day. So as I said earlier also, that I am only cautious from this 6th to 12th, and 12th is expiring today. I am keeping my positive stance from 14th, that is day after tomorrow. Whether that happens with the positive cues coming in from the global markets, maybe today evening and tomorrow, or because definitely if you see the DII selling, which has been happening for last 1 week, as I said, because of the advanced tax payment pressure, and I know many HNIs corporates have also been liquidating in the market, that will get stopped from day after tomorrow. So in fact, I am giving a brave call that start picking if not in F&O, start picking as an investor, maybe in the ideas and the stocks which you like. So I am keeping my positive stance from 14th, and then maybe till expiry I don't see any weakness. Maybe barring few days, I am not saying that from 14th till 29th till expiry you will see all the positive days, but I don't have that cautious view which I gave between 6th to 12th.
Okay, fine. Mr. Tulsian, we'll come back to you for some more stocks. For now, let me get Mayuresh Joshi into the conversation as well. He's also sitting by. By the way, the real estate stocks are getting hit very hard today. So HDIL is now down 11% on the back of really disappointing numbers this quarter. DLF is down almost about 10%, and Indiabulls Real Estate is now down almost 7.5%. So crumbling for the real estate sector right now. Mayuresh, what's your advice to retail investors? Because this is a one-day affair for now. At least we've seen a one-day sell-off. Do you think this could extend itself, and at what point should investors come in and start buying?
Afternoon, Sonia. Again, I think all of us were harping on the point that valuations had become stretched and one should wait for corrections or dips onto the markets. Our own sense is that nothing has changed fundamentally. I think the earnings are still going to take a couple of quarters to start reviving. The capex cycle is going to take that amount of time, periodicity as well. And globally, I think things are going to be extremely volatile because of the Fed meet coming around on the 21st of this month. So having said that, probably I think all these corrections and the opportunities that one really wanted to enter qualitative names, our own sense is that in a staggered way over the next few weeks, if one can really position yourself on high qualitative stocks, whether they be from the private banking space, cement, autos, auto ancillaries, I think you'll get good buying opportunities over the next few weeks. So for the retail investor, my own sense is that you're waiting for corrections, you wait for your price to enter the stocks that you're waiting to enter, but again enter into a staggered manner over the next few weeks. And again, I think I am keeping a positive view over the next few months on the Indian markets and the Indian economy as a whole.
Okay, Ashwini, small mercies, but 8699 was the morning low, 8711 is what we have right now. If we have a doji kind of a day, opening and closing at same levels, would bulls be happy that at least we didn't make consistent intraday lows?
The only takeaway from today is that there wasn't follow through selling. Plus, Bank Nifty after a 2000 point rally is finding it difficult to fall 500 points. That just means that the selling pressure is not very great. So maybe it will be a flattish correction rather than the big downside that people expect. Maybe Bank Nifty will find support at the 20 DMA, not the 50 DMA. So that's about it. But it's clear that we haven't broken the morning lows, means that incrementally big selling did not happen. So correction continues, but message from today basically is that this may not be a deep or sharp correction. 8600 thereabouts is not a deep correction, and at those levels probably we could find support.
Okay, so not a deep correction just yet, but just keep an eye out on the Dow futures as well, down about 100 points right now, trading closer to the low point of trade, an indication that tonight may also be perhaps gruesome for the US market, similar to what we saw yesterday. But let's do one thing, let's take a break. We haven't done that for half an hour now. Our closing bell money control question of the day is the comment that came in from Sundaram Mutual Funds S. Krishna Kumar, who said that this correction is a good opportunity for long-term retail investors to enter the market. Do you agree? Log on to moneycontrol.com, post your responses there, and we will read out some of the most interesting ones post 3:30. It's not that bad really for the market. We have held on to our early morning lows of 86.99 and now the Nifty is back above 87.17. Yes, it will turn out to be quite a disappointing day for the bulls, but for now we're at least holding on to lower levels. Stocks like Kotak Bank are making a bit of an attempt to recover. So if you look at the intraday chart there, that stock is seeing some minor buying at lower levels. It's picking up from the lows of trade. But before we go back to our guests, let's get you some excerpts of an interview that we had with Madhu Kela of Reliance Capital earlier this last week. He said that valuations do not provide much comfort at these levels and was a bit cautious. So listen in.
Markets have moved 30%, 30-35% in the main indices from there. And there has been a lot of appreciation if you go a little deeper in the markets. So it's a no-brainer to say that obviously the comfort is not as high as it used to be when we were around 7,000 levels, because obviously valuations have moved up. There is so much liquidity in the world and so much money is being pumped in by the central bankers. So basically equity is looking relatively better than fixed income. In the world where there's even 0.5% or 1% growth is so difficult to find in various pockets, we are still talking of 7.5-8% growth rate in India. We are still talking of select companies, good companies growing their earnings by 15 to 25% over the next 2 years. So this is a real golden spot given where the locals are positioned. I can't even say that market is ready to tank because the valuations have got elevated. A small shift from bond to equity can take is what is keeping the equity valuation elevated. So that is the only justification of it's not the only Indian valuations have moved up. Valuations worldwide across the world have moved up. So the only justification which I could come up is this shift from bond to equity, which is keeping the valuation elevated.
Okay, Mr. Tulsian, two stocks, HDIL, that's down about 11% right now, and what about Vedanta now from here on? What next for this stock, assuming that the merger goes through?
Anuj, you have said two stocks. Can you repeat those stocks? Because your voice got distorted in between.
First is HDIL and second is Vedanta.
See, coming first on HDIL, definitely the results were dull and disappointing, and honestly, if you really ask me, the kind of weakness which we have been seeing in the residential construction market, more especially in the Mumbai, where HDIL has a very good presence, these kind of results were expected. In fact, maybe in the commercial space in Mumbai, we are seeing some kind of inquiry, some kind of uptake, but that is not seen happening in case of the residential pocket and all sort of things, where HDIL has a significant presence. So I'm keeping my neutral stance, and there is no fresh trigger for the stocks available. But yes, if it corrects further, maybe below 90 or so, right now it is ruling closer to about 90. Maybe as an investor, it seems to have bottomed out. As an investor, you can take a call, because the stock is seen moving in a range of about 88, 89 to 98, 99, and you swiftly see the stock moving back to that range. So I'm keeping, it seems that the bad results has got fully factored in, and now one can go for buying the stock at the current level as an investor, not as an F&O trader. Now coming secondly for Vedanta, I have always maintained that you maybe couple of days back when on Friday also we have discussed that yes, things are looking good for Vedanta of this merger if it goes through, but some kind of market making, because if you have a target in front of you that you want to get the approval of both the companies, you already got the approval of Vedanta shareholders, which was bound to come, and once you have this event getting accomplished, even presuming that the Kane shareholder approval also will come for this merger, definitely you will see the price correction happening. But my question is more on the kind of price movement which we have seen, whether the movement or the upsurge has seen just to facilitate this merger or what. Because if you really ask me, there is no reason for the Kane shares to move up so swiftly and so fast, or there was no reason for the Vedanta shares to move up so fast if you take the price chart of maybe about 3 or 4 months of both the companies. So these are all momentum plays seen now, and maybe once this approval comes of Kane, it will settle at some place, because then Kane will not have its own leg. They will only be riding on the shoulders of the Vedanta, considering the swap ratio of 1:1 with 4 preference share, which may be having a net present value of closer to about 32-33 rupees.
Okay. Ashwini, we have discussed the moves on the metal names, but after the kind of fall that we've seen today, names like Hindalco down almost 10%, are there any fresh shorting ideas that you see in the metal names, especially the bigger ones?
See, anything that has gone down more than 5%, chances are there has been heavy offloading. So these sort of moves will not end in a day. So chances are all sorts of metal and real estate stocks will continue on the downside and will probably outperform the market on the downside. So Tata Steel, Hindalco, similarly HDIL, DLF, they're all sitting on massive rallies, and today's decline offer you opportunity to short further. Now maybe you'll want to wait for some sort of a higher opening on Wednesday, but these are clear indications that these stocks have more downside.
Okay, well, the Bank Nifty 19,788 now. Looking at the cash market volumes, 18,377 crore. Today, Sonia, could be the day of aggressive FI selling in the cash market, and probably in the index futures as well. Maybe in the index options, the data that I'll be watching out for is the index options data, and whether there's any kind of call selling that's taken place, because the way we've seen such a big build-up in index calls is telling you that there's been some bit of selling in index calls as well today.
So in the sense of, where this market could be headed, given that the US markets are still, they look like they could be under pressure later today, it's just better to wait and watch, right, before taking that first plunge in?
Oh yes, and I think the bulls would actually be happy that we are not working tomorrow, because that gives them 2 days, even if there's some follow-up selling maybe today in the US market, maybe tomorrow evening there's some bit of recovery that takes place. But this is a market which looks like, at least at the Nifty level, it wants to test the 50-day moving average, because most global markets are doing that. And whether it bounces back from here or not, 8,600 is that level. So maybe it wants to go there. I think the bigger problem is in the mid caps, in the ranked mid caps, because that index was hitting life highs on a daily basis, and the rally was just too huge. And normally at times like these, you expect more correction in the mid caps, and today could be start of that. We've seen about 3% decline in the mid cap index. I wouldn't be surprised if mid cap index has to correct more on Wednesday, maybe Thursday, and maybe by Friday, when normally things bottom out. That will be the time when you'll see some more correction in the mid cap space.
Oh yes, this is the biggest one-day fall in the mid cap space that we're seeing, at least in the last 6 months. So in terms of stocks, apart from the real estate stocks, you also have the entire JP Group stocks that are under quite a bit of pressure today. Names like L&T Finance are down almost about 5-6%, and as I mentioned, a lot of non-index large caps like Jain Irrigation, India Cements, etc. are all under pressure now. Names like NCC2 down about 4-5%. But Mayuresh, I just wanted your thoughts on Tata Steel, because we are awaiting those numbers anytime soon. This time around, the European operations are expected to be decent, but the domestic operations could be under pressure. At this price, how are you approaching Tata Steel?
No, Sonia, again, I think the stock has moved up largely on expectations of MIP working in favor of that. And yes, I think the realizations will improve, specifically on the domestic front. So our own expectations are realizations improving anywhere by 2,500 to 2,600 odd rupees. What this basically does for the domestic operations is that the EBITDA per ton actually inches up. Point to be noted here also is that there was a planned shutdown at Jamshedpur. So to that extent, I think the volumes might not be that evident. But with Kalanganakkar being fully operational, my own sense is that going ahead, in the few quarters to come, with demand expected to remain strong, at least domestically, the domestic EBITDA per ton should hold out. European side, again, I think with the sale of the European assets, which is not that profitable on the margins for the European business, I think the volumes expected between 3.1 MT. And again, realizations expected to improve there as well because of what we've seen both in terms of LME pricing as well as the demand-supply dynamics. Now, what the management has to stay in reference to deleveraging of their balance sheet, the sale of the European assets are going to be crucial. But yes, I think the numbers domestically are going to be better off, and even on a consolidated basis, I think the EBITDA margins should hold up pretty well, both on a quarter-on-quarter as well as on a year-on-year basis.
Okay, Mitesh, your call on Tata Steel and also your call on, say, Infosys now. Okay, Mitesh, we'll come back to you in a bit. Let's do one thing. Let's get you some more global opinion that we got through the day. In fact, Timothy Moore of Goldman Sachs expects Fed to hike rates in September or December this year.
We certainly think that there's a good chance of a hike either in September or December. But I think the larger point really is the slope of future Fed increases. And as long as that remains benign, and the market is certainly pricing that, then our sense is that an air pocket around a potential Fed hike, either in the upcoming meeting on September 21st or in December, that investors will buy that dip. What we've done is to take a more constructive view on China. China's been a laggard. It's only just begun to start outperforming the regional index. There are clearly significant flow arguments, including the much discussed southbound flows, and there's a catalyst on that coming up with the Shenzhen Connect in the fourth quarter. We think that on a cyclical basis, the economy will actually begin to strengthen in the fourth quarter.
Okay, interesting internal that my colleague Jayesh has just sent us. The Nifty is down 230 points in this two-day correction. Now, that's the first time it's done that since February 2016. Now, February 2016, of course, was the bottom of the market. So, ever since that rally has started, we haven't had such 2 days where the market has fallen like this, 230 points. So, in some sense, this is the sharpest correction, near-term correction that the market has had ever since that rally has started. But let's get some BTST ideas as well. Mitesh and Ashwini is still with us. Ashwini, you go first. First of all, on the Nifty, you still believe that the morning low not being broken is a good thing for bulls to take, and your BTST ideas?
I've seen this market down 1,000 points, 1,200 points. And given the kind of scare there is globally, generally EMs do a lot worse than developed markets. We are almost behaving like a developed market. So that's good news. But we will correct, and 50 DMA will come in, and that'll be a great opportunity to buy. That goes without saying. But till then, PSU banks, metals, infra companies which ran up, they'll see selling pressure. So BOI, Bank of India is a sell with a stop of 119, target of 107. Reliance Infra is a sell with a stop of 590, target of 555. And Trent is doing extremely well, not only today, but for last many days. That's a buy with a stop of 235, target of 252.
Oh yes, Ashwini, I take your point. We are definitely grateful for the small mercies in the market. I mean, it could have been much, much worse than what it is today. I think we got off relatively unscathed with just a 150-point cut on the Nifty, so far at least. Mitesh, what about you? In the last 15 minutes of trade, what would top your list to either buy or sell?
Yeah, I have two sell ideas. The first one is a sell on Shriram Transport Finance, can be sold with a stop just above 1190 for targets of around 1150. And the second one is a sell on Ambuja Cement. I think cement stocks are correcting with some kind of strong pressure on the downside. So sell with a stop at 264 and look for targets of around 251, and it could be a 1-2 day call.
Okay, let's do one thing. Let's get a feedback going. Nimesh Shah has been talking with dealers, and there's some feedback. Nimesh, most useful. What's the feedback? Will we see large FII selling? Is that the feedback, or has there been some buying as well at lower levels?
Hi, Ruth. So, clearly the sell-off is largely global in nature. So, most of the Asian pads were negative, and that's impacted India as well. However, within the FI community as well, some of the India-dedicated funds have not sold off the last position. So, maybe you'll not see a very large FI sell figure in the cash market today. At the same time, some of the domestic funds have bought into the India-centric stocks, at lower levels. So, it's a mixed in terms of as far as flows are concerned. But clearly, from a global perspective, these are first signs of panic coming in. And remember, last week, we raised this point of how Goldman Sachs had raised the probability of a Fed rate hike to 55%, and that actually was a bit of a first warning sign for global markets. And now it's playing out for across all Asia and as far as and India as well. So that is something to watch out for. So I guess from here till the 21st, when the Fed meet happens, probably you'll have a very sideways kind of a negative move in the Nifty and in the Bank Nifty. So people are not willing to bet at these levels, at lower levels, largely into the large cap names. Having said that, there is still some bit of buying coming in from the DIs, so watch out for that number as well. But clearly the momentum is on the downside now, especially in the mid caps and the momentum stocks. So clearly the real estate names, the metal names are falling off in trade today. From a technical point of view, the sense I'm getting is if 8700 is broken down, that will open up the gap for a further sharp sell-off to 8550, even 8600 on the Nifty. So that's something which dealers fear and worry about. But in the near term, it looks like the upside is capped, given that there is a bit of a global risk off, and the fact that the Asian pads are so negative, it will have an impact on India as well, at least in the near term as far as global liquidity is concerned.
Okay, Nimesh, thanks for those words of caution. So that's the word coming in, of feedback coming in from the dealers. But let's get an update on all the stocks that are buzzing around at this point. The market may be holding up above its day's lows, but there are plenty of stocks that are under quite a bit of pressure. Varinder will tell us. Varinder.
Well, clearly many stocks are reacting based on results. So look at Reliance Defense, post set of numbers, the stock is down 15%. Look at HDL, you mentioned about that, down 11%. Hindustan National Glass, Man Industries, most of them, very bad reactions, 10 to 15% down. There are some gainers as well in the small cap space. Look at GSS America up 20%, Mangalam Timbers up 20%, Aksh Optifiber, SC Investments, Semper Nutrition, and the Rane Group continuously doing well. Look at Rane Brakes, that stock has been surging since last many days. Today as well up over 10%. Rane Madras also moving up. Simplex Castings, Autolite, Sahara Finance, Housing Corporation, Everest Kanto, SIEL Limited, Man Aluminium, Arihant Superstructures. Among the IT gainers, there are mid-cap companies like NIT Limited and Sept, which are moving up nearly 6%. Sept. Some losers, stocks which have been running, crazy in the last few days in the small cap space. Look at Ojas, Asset Reconstruction down 17%. Mahamaya Steel moving down. Autoline again, that has been buzzing down today. Timex, ILFS Engineering, Anant Raj, Punj Lloyd. There are many stocks you should keep an eye on, before the markets reopen on Wednesday. Tata Steel and Nalco reporting results today, and tomorrow you have Coal India, Suzlon and Reliance Infra who will be reporting numbers among the big ones.
Okay, Varinder, thanks a lot for that. So that's the list of buzzing stocks. Tahir Basha is also with us. Tahir, good afternoon. So, the big question is that is this a big buying opportunity? Over the last 2 days, we have seen decent correction, something we haven't seen since the February lows. But do you see the market presenting even better opportunity, or is today as good as any opportunity to buy?
So I think over the very near term, I think there would be some more opportunity on the way down, and we've had a fairly decent rally, especially after Brexit. It's been almost a 25% run on the market itself, and individual stocks, many of them have actually done significantly better. So it's been a massive run. I'm not surprised that we've finally found a reason to see some bit of correction in the markets, and we had probably in the very short term become a little more stretched even in terms of overall valuations and valuations specifically for many individual companies as well. So I would think we have a little more of softness ahead of us. It's still a corrective phase. There's no reason to panic, but I think we can probably wait a little while longer to get some better opportunities.
Okay. The stocks that you guys hold in your portfolios, say, your funds like the Focus 35 fund, are very domestic oriented, Tahir. So names like Britannia, Eicher Motors, Maruti, they don't have anything to do with the global sell-off. Would you continue to accumulate names like this? Maybe not now, maybe if the sell-off gets deeper?
Yeah, absolutely. I mean, I think these are all stocks which we're very clear in our heads that We are there in them for the next some years, and we see the growth opportunity unfolding in a fairly reasonable manner in front of us, and we don't really see, as of now at least, we don't see any great issues with any of these companies. So I think that's exactly the reason why this very concentrated high conviction portfolio. So we believe that they will probably have some gyrations in between, but any sharp dips and valuation corrections would definitely become opportunities, as you rightly said. So I think that's the better part of it, that since we are more domestically oriented, you don't really need to, at least from a business perspective, worry more about what's happening to the global markets and global economies. You are largely domestic economy focused, and there we know that many things are under control and many things are actually getting favorable from a near to medium term perspective.
Okay, Ashwini, 3 stocks, NIIT, Delta Corp and Patel Engineering, doing good in a weak market, and all 3 stocks actually are in a bull market of their own. What's the call on these stocks?
See, Patel has been going up for many days, so definitely not a buy. But the other 2, NIIT is probably moving up, since it needs to catch up with Aptech. So probably looking for good for 115, 120. As far as Delta Corp is concerned, had a mild correction and now restarted its rally. I've given a long-term target of 200, but definitely, once the market comes back, if something is doing well in this sort of a mid-cap market, chances are it is heading much higher. So Delta Corp near-term target could easily be closer to 175.
Okay, well, we're just counting down to the end of trade. We have about 8 minutes left, and by the end you get a sense that there was a big punch, a knockout punch from the bears, but the bulls are really not down and out. It was a blow of almost 430 points on the Sensex, but it stood there. So as we count down to the final minutes of trade, let's get some final calls in as well. Mr. Tulsian, what are the 2 or 3 stocks that you would keep ready, to buy if this sell-off gets a bit deeper? Okay, we can't really hear you, Mr. Tulsian, so we'll come back to you in a bit. But for now, it seems like, good to see, or we're grateful to see some small mercies in the market, because the sell-off could have been much, much worse than what it is.
Yeah, I think, but maybe it's too early to take that call, Sonia. This is a market which, at this point in time, if Dow is down, say, another 100, 200 points, make no mistake, on Wednesday will again fall. So that's not the problem. I think the issue here is, for example, let's take a look at India Cement, or Ultratech Cement for that matter, or ACC for that matter. These were the stocks which kept hitting new highs almost on a daily basis. A lot of people kept saying that I will buy these stocks if they come to my levels. These stocks have started to correct as well. Ultratech was down 4% on Friday. I think it's down another 2% today. ACC was down, I think, 3% on Friday. It's down another 4%. I'm not saying that you go out and buy these stocks. What I'm saying is that the market now is giving you an opportunity where you identify stocks and have your levels. Your levels, for someone it could be 10% lower, for someone it could be 15% lower. But if that comes into your zone, the strongest stocks, the market leading stocks, if they come into your zone, then go out and buy, because it would not matter whether Fed raises rates by 25 basis points or 50 basis points. The cement sale is not going to stop because of that. So that's the call that a prudent investor now needs to make on some of the stocks. The market will give you that buying opportunity between now and heading into the Fed rate hike.
Oh yes, no, all I was trying to say is that perhaps it could have been much worse in terms of a sell-off today, given the way some of the global markets are moving. So in that sense, the bulls got spared a bit.
Oh yes, today, it could have been ugly, Sonia. It could have, it easily could have been, 300 point Nifty fall or something like that. It could easily have been that. Look what Hang Seng did. Hang Seng was down 3%. We were down 1.5%. So in that context, I think I take your point. But that also leaves the door open for more correction on Wednesday, because our market has been relatively resilient. So obviously it won't fall, at least at the first point of fall. It won't fall as much as some of the other high beta markets, but the market is still vulnerable in the near term.
Oh yes, it definitely is. So let's do one thing as we head into the final moments of trade. Let's listen in to a snippet of the conversation we had with S. Krishna Kumar of Sundaram Mutual Fund. He believes it's a good time for long-term investors to buy even now after the first dip.
normalization process has to happen as the economy also gathers steam. So it's eventually has to happen, and we probably put it around December, Jan, when the rate hike could come through. But whenever it comes, I think it's going to be another one which is accompanied by a lot more dovish statements in terms of, we'll watch it as it goes and we'll watch for data and stuff like that. So I think the markets, I think, are probably a little running ahead in terms of, a sell-off. So we would actually look at this correction as a good opportunity for investors to kind of come in terms of those who have missed out on the previous occasion.
Mr. Tulsian, the question that Sonia was asking you, which stocks would you keep on your radar, which you would buy if they correct more?
See, Anuj, actually keeping the Q2 numbers in mind, there is one product that is called vinyl sulfone amongst the dye intermediate space. And the kind of, I'm expecting there are 4 or 5 players who are making this vinyl sulfone, and the prices of the product is now ruling at 700 rupees per kg, which is the highest since in this last 40 years since India has started producing it. And the Q2 numbers are likely probably in the best ever, which in fact the similar kind of predictions I've given for the sugar stocks, if you recall, about 1 year back. So Q2 numbers of 4 companies which are making vinyl sulfone. One is Bodil Chemical, second Akshar Chem, third Kiri Industries, and fourth Bagheria Industries. Bagheria Industries, I'm a director on the company, so that disclosure may get noted. So these all 4 companies are making vinyl sulfone, and if you see the G20 summit just got over in China, and now China, who used to be earlier an exporter, now have become an importer of vinyl sulfone. And I'm expecting that, whatever the industry sources you talk to, that the prices will rise further by about 10 to 15% in next 15 to 20 days. That means the whole Q2, actually Q1 numbers of all these 4 companies were very good, but Q2 is likely to be the best, and that results will be the best in the history of the company, maybe in their last 25 years history, and that will definitely be seen a big trigger. And in fact, if you talk to the industry experts, you don't see the prices tapering off in this next maybe couple of months as well, looking to the demand of the China. So keeping this dye intermediate specifically, one should not plunge into the any dye intermediates like H acid. H acid is also dye intermediate, but you have not seen that kind of realization surging up. So these 4 companies who are making vinyl sulfone, I'm keeping my positive view with a Q2 results in my mind, and that is, it's still the shares from the current level can give you a return of about 15%, or maybe I won't be surprised to see 20% also in next couple of months from the present level.
Okay, that's a very interesting segment that you've spoken about, Mr. Tulsian. I missed the last name. I got Bodil, Bagheria, Kiri Industries, and which was the last one?
Akshar Chem. Actually, there are only 4 listed companies, Sonia, who are making vinyl sulfone. Sometimes, people just start taking any dye and dye intermediate, but it should not be, because if you confine purely from vinyl sulfone point of view, they are the only 4 companies which are making, and 5th one is a Shri Pushkar, which have started making about 40k tons per month, while all these 4 companies are making anywhere between 300 to 500 ton per month.
Okay, yeah. Mr. Tulsian, thanks for pointing that segment out. So keep an eye out on that. But let's just count down to the last few minutes of trade. Ashwini, by the end of trade, 8,700 at least is holding on the Nifty. Considering that we have a holiday tomorrow, I know it's unfair to ask you about the strategy for day after, because you'd want to see the US markets. But still, what's on your mind as an orientation for Wednesday?
See, basically the correction is on. There's no question about it. Now, on Wednesday, we'll be heading into that congestion zone. You would recall that we were range bound between 86 and 8,700 for a while. So even if we gap down, we will find support, and probably Wednesday will be more volatile than today, because today we just gapped down and just fell flat. On Wednesday, I think you will get intraday rallies and intraday declines. So more choppiness on Wednesday, because Wednesday chances are will open right into support. So basically the market will take a few days, even if it has to break this 86-8700 zone, it will not get broken in the first instance. And if we gap down, maybe it won't be such a bad idea intraday to try a buy trade, because 86-8700 is a strong support.
Okay, just about 30 seconds left for markets to close. So let's just do a quick recap. It was a down day, but if you came into the market at 10 a.m. From that point, the market was flat through that. Essentially, what the market did was it gave you a gap up, and that's it. After that, it was pretty flat through the day. So, yes, there was no intraday recovery, but there was no intraday incremental sell-off as well, at least on the Sensex and Nifty. Yes, the mid-caps collapsed a bit more, but that would happen on a day like today. In terms of stocks, let me just first talk about the winning stocks, because there were only 6 gainers. 5 of them were IT: Infosys, TCS, Tech Mahindra, Wipro, and HCL Tech. And then, of course, you had Reliance. Apart from that, it was a sea of red. 2 pockets where we saw maximum weakness: metals to begin with. Hindalco was down about 8.5%, Tata Steel was down about 6%, and banks. Yes Bank, another 6% knock on that stock, sub 1200. Bank of Baroda was down about 6% as well, and SBI was down about 4%. Maybe you want to add cement as well. ACC, Ambuja, both were down about 4.5% in today's trade. Then, of course, you had some more heavyweights like Tata Motors, the Tata Motors DVR, Larsen & Toubro, Axis Bank, ITC, Lupin, Ultratech Cement. All these stocks were down about 2%. ICICI Bank as well was down about 2%. But the sharper knocks really came in the mid-cap space, Sonia.
Oh yes, and that makes you worry a bit about the texture of this market here on, because the mid-cap index was down more than 3%. The market breadth was very weak, 1:6 in favor of the declines. Now, usually the first casualties come in the high beta names. So today you had that in the real estate space. HDIL was down 11%. It had negative news flow as far as its numbers were concerned, very weak earnings. DLF Indiabulls Real Estate not too far behind, down about 8%. The next set of casualties come from the infrastructure space. So you had JP Associates, a couple of other names, GMR Infra, etc., that were down. Reliance Defense had a weak set of numbers, so that stock was down about 15%. You had some power names like Adani Power, etc., that were down about 5-6%. And sugar stocks were under pressure today, so Bajaj Hindustan down almost about 6% Sri Renuka as well was sort of saw some amount of corrections in trade today. On the upside, though, not too many stocks to talk about. Patel Engineering has been having a smooth run lately, so 5% higher there. NIIT, Subex, Delta Corp and Manappuram General Finance were a couple of stocks that just held up in the green. But leaving that aside, it was a disappointing day for the bulls, no two ways about that. But we managed to get off fairly unscathed, because the Nifty held on to that 8700 mark and held on to its day's lows of 86.99. But let's find out what the mood is like as we head into the next couple of days. Tahir, from now until the 21st of September, the FOMC meeting, there will be a lot of volatility in this market. What is your advice to retail investors? Just wait till the FOMC meeting gets over, or do you think that even amidst this volatility, it's a good time to put in some money?
Yeah, you will always find opportunities that you can individually, look at. A broad headline numbers of the headline levels of the market will tell you one thing, but then there could be individual stocks which you like and which you've always wanted to buy. And I think what investors need to be guided by is the performance in terms of earnings. And it will be better if one sticks to some of the companies which have been able to deliver earnings even in the recent past, even in the recently closed quarter, and where there is at least a good amount of belief that the earnings trajectory will continue at least for the near foreseeable couple of quarters, if not more, because that will give you that necessary support in terms of any adversities or volatilities in the market in the coming few months. So I think it is better to focus on those which have delivered. In fact, it was quite a surprise to see in the market that there were many companies which didn't deliver but yet held on to the market. So it was a characteristic of the market which ensured that even some of the non-performers did not actually correct. So I think the best bet will be to back those which have delivered earnings in the recent past, and there is a fair bit of visibility on them continuing to do so in the future. And if you see any sharp dips on those opportunities where valuations too have corrected, that's the way to proceed in this market, not necessarily wait for the 24th.
Okay, Mayuresh, any stock that you would want to buy after this correction?
Again, I think to put forth the point that Tahir has been mentioning, I think where the earnings growth looks pretty strong for companies which have delivered numbers this got around, and the expectations largely that Q3, Q4, you will see strong earnings momentum continuing. My own sense is that housing finance companies on sharper corrections can be good buying opportunities. Cement plays, as you were mentioning, I think further corrections become good buying opportunities. Specific stocks within the logistics space look interesting. Specific stocks within the auto ancillary, two-wheelers, tires look interesting. interesting to us. And even within the logistics stroke related to logistics, I think stocks like Navkar Corporation, if they correct further from the current levels, the new ICD that they've probably opened in Vapi, I think that is going to abet their earnings substantially. So our own sense is 16% top line, bottom line growth, margins expected to remain stable, but again on declines. I think wait for those corrections to come to and buy in a staggered manner.
Okay, gentlemen, thanks for sticking around and aiding us through this very volatile phase for the market. It's been a disappointing day. Actually, there was no volatility today. After that initial gap down, the market just stood there through the day. 8,700 though was held by the end. Our closing bell money control question of the day was